Hello and welcome to NDTV Profit. Joining us today is Mr. Anmol Jain. He is the Managing Director of Lumax Auto. He's speaking to us after the company reported, and I must say, an extraordinary set of numbers where the EBITDA or the operational profitability of the company jumped more than 2.5 times to 105 crore rupees. Net profit itself was up 72%. Revenue as well, the top line was up 65%. Mr. Jain, welcome to NDTV Profit.
Thank you, Tushar.
Yeah, so quite a stellar set of numbers that we are seeing in this quarter. What is driving this growth? Is it organic, inorganic? Please let us know.
Well, I think it's a bit of both. If you look at quarter three from an industry perspective on a year-on-year basis, the industry has done exceedingly well. The industry grew by almost 16% overall, largely driven by the two-wheelers. Also, I think because we took an inorganic position at the beginning of this year with the acquisition of 75% into IAC India, those numbers, if you look at it from a last year perspective, weren't there. So because of that, this massive growth is also because of the inorganic strategy the company ventured into. But that was a part of our midterm strategy. So I think it's a combination of both the industry faring well as our own strategic inroads into the inorganic sector.
Okay, talk to us about the organic piece as well. I think you have opened a new facility in Pune. What is the contribution of that facility and how much will it actually contribute going ahead? If you can tell us something about that.
So the new facility in Pune is for one of our joint ventures, Lumax Cornalia. Lumax Cornalia is still a pretty negligible piece of the pie in terms of the overall contribution of the consolidated revenues and profits. But IAC, which is almost close to almost 1/3 of the consolidated revenues, is also in a phase of expansion. So there are a couple of brownfield expansions which IAC India is currently undertaking just to meet the strong order book which the company is sitting on. These plans should go online later part of this year or early part of FY25. So we do expect a good growth coming both organically from not just quarter four, but even the remaining part of FY25, at least till H1 and quarter three.
So even higher numbers in Q4, sir?
Q4, definitely. You have to understand that in Q4, usually being the year end, every OEM is looking at maximizing its production. So yes, Q4, I think the growth momentum will continue. If you look at the January retail sales data, it suggests one of the best Januaries we've had. So I do expect quarter four to be a pretty strong quarter. And as I said, FY25, the signs are quite positive. I think the momentum will continue. So we're pretty bullish for FY25. And even though the industry might be growing at single digit, we are very confident that Lumax Technologies will have a growth rate of about at least 15 to 20% on a top line basis for FY25, mostly backed by new product launches. And since we enter into certain new products, which started mass production just in later part of this fiscal, we will get the full year advantage in FY25 for that as well.
Extremely bullish commentary, sir. Is this also due to the clients that you service? So if I look at your client list, M&M contributes about 27% of your business. Bajaj contributes about 15% of your business. So both of them are actually growing. If we saw the numbers as well earlier in the month, or actually the day before yesterday. So what is that push that is coming in both in the car space as well as the two-wheeler space?
I think if you look at the overall market, Tushar, the market is moving more and more towards premiumization. I think the entry-level segment still continues to decline or be under stress, but it's the SUV segment and specifically the higher CC bikes, which are doing a lot better. And both these companies you talked about, Mahindra and Mahindra, of course, is one of, SUV maker. All their models are in the SUV space. So I think they have had a great run. I believe they're about 21% up from a 9-month production basis. And I think with the slew of product launches, which is planned in FY25, both on ICE as well as electric, I do expect that momentum to continue for Mahindra, which continues to be our number one customer. Bajaj also, I think, despite the exports market not faring too well, they've done exceedingly well in the domestic market. Their Q3 results were also phenomenal. So I do expect that Bajaj Auto will continue to make further gains in the domestic market in FY25. And if the export markets were to recover, I think that will be the icing on the cake. So we are well positioned with both in the passenger vehicle segment, with Mahindra and Maruti Suzuki being our key customers, as well as Bajaj Auto and Honda Motorcycle being the key customers in two-wheeler as well. So we're pretty strong on both the segments.
Okay, all right. So great FY25 as you're predicting 15 to 20% growth. How does the capex stand then? I think your capex estimate for FY24 is 90 crores to 100 crores. How much are you going to spend in FY25 to get those growth numbers?
So if I look at the order book, we're sitting on an order book of about 1,100 crores currently. This would obviously come into the P&L over the next 2 to 3 years. So to give you a guidance on the capex, our asset turn ratio today is about 1 is to 2.5, where IAC is a much higher asset turnover because the value addition is way more than the other businesses. So I would expect around 3 to 400 crores capex outlay over the next 2 to 3 years to meet this order book of about 1,100 crores, because almost 95% of this order book is new business. It's not really a replacement business, so to speak. So it will incur new and fresh capex in terms of capacities, in terms of technologies, in terms of brownfield and greenfield expansion.
Okay. Final couple of questions, sir. You have a strategic partnership with Germany's Bluechem Group for innovative automotive car care solutions. So is that a sign of internationalization of your business?
No, actually, Tushar, aftermarket continues to be a key part of our business. Aftermarket contributes almost close to 15% of our total consolidated revenues. And I've always mentioned that we are very bullish that in the next 3 years to 4 years, we actually want to double our aftermarket revenue. So this particular partnership with Bluechem Group is specifically looking at providing car care products in the aftermarket. Bluechem is a multi-billion-dollar group, also services OE clients in Europe. And we do expect to test the market first with the aftermarket, as well as then later we'll see if there is a possibility to enter the OEM space. But I think Lumax has a very strong aftermarket presence in India, backed by a very strong goodwill of the brand. And with the technologically superior products of Bluechem, I think it's a pretty good partnership and a win-win situation to expand our footprint in the aftermarket further.
Okay. Finally, I think the most important question, I've just kept it for the last, the EV piece of the puzzle. Your 40% of your total order book is coming from the EV space. Are you planning to grow that? Also, how much does the EV business contribute to your top line, sir?
So Tushar, first, I think I'm happy that most of our products in Lumax Technologies are EV agnostic. So with the transition towards EV, whether it's in passenger car or two-wheeler, there are really no products which become extinct. So on the other side, I would say that the value addition and the technological gains which we will get in certain product lines are far more in the EV because of plastics, lightweighting, more electronics, more digitization. So we're definitely looking at EV as a big opportunity. Most of the 40% order book you talked about are largely driven in the passenger vehicle space, or as well as certain key models of the two-wheeler. EV, I would still feel that as a total portfolio is still very nascent. There's only a penetration level of about 5%, give or take, in the two-wheeler EV space. Yes, it's rapidly growing, but I think it will still take a long time for it to become a sizable piece of the pie. And in the passenger vehicle space, it's even lesser. So while there is a lot of traction, I think our strategy is very clear. We would continue to be one of the key technology providers for both ICE as well as EV. And that's our endeavor. And I think the teams are doing a great job in terms of getting traction on the EV order book as well.
All right. Thank you so much, Mr. Jain, for speaking with us today. Congratulations again on those numbers and all the best for FY25.
Thank you, Tushar. Thank you for having me.
Yeah. Thank you, viewers, for tuning in. This is Tushar for NTV Profit.